Is everything money right on HPQ? Let's talk about that. I seriously can't fault the whole team except, the projection part and them assigning PEs, for example, to HPQ. They assigned 12, 13, 14 PE to HPQ. This is a snap of their projections for HPQ in the latest video about the stock in November 23, 2021. In this video, I will explain why I think HPQ shan't trade at those PEs and why HPQ is trading at low PEs. Hey guys, I'm the Newb investor. Today we'll be screening HPQ through our three metrics to see whether the stock is trading at an overvalued, fair, or discounted prices. And from there, we should see if the stock is a buy or not. But of course, HP can trade at those PE when the EPS are low and the PE had to compromise. But seriously, HPQ should not trade at 12, 13, 14 PE because it trades at low PE for some reason. That reason being their yields, which we'll discuss later on my second metric. HPQ is currently trading at 36.35 with highest price of 78 in April 2000. That's 53.4% of the highest. Current market cap of 38.29 billion and PE ratio of 6.47. EPS trailing 12 months of 5.57. They give out an annual dividend of $1 a share, a 2.75% yield of the current price. If you're in it for the dividends, it is safe at only 18% of their current earnings. First metric, we want an EPS lower than 3. It's 1.16. This is good. This tells us that we're only paying for 1.16 times their earnings. If we buy at these prices, this is a result of them aggressively buying back shares, which you can see here. Buying back shares increases the EPS, even the net income stays the same. I've included here the EPS history in case there's an anomaly in the PE that, skews the whole metric. Next metric, we want to pay $1 or less for 1% of the money they're making. This is based on the lowest yield of both the net income and free cash flow yields from the current year and the averages of 5 and 10 years. The more data, the better, but in this video, we'll only be using 5 years of data just to show you our process. Looking at the table, this is the revenue they constructed, the costs, expenses, and the income. I'll show you the relationship of the sales. In 2021, they spent 50.07 billion in COGS to make a revenue of 63.487 billion. That's 78.87% of the total revenue. You get the idea. In average, they spend about 90% in costs and expenses to make their revenues, while they keep 8 to 10% of the revenues as net income or free cash flow. This metric tells us how much we're paying for the stock based on their yields. This also answers why HPQ trades at low PE. Why do I include the net income and not just the free cash flow? I thought the net income is also important as the EPS is based on it and not on the free cash flow. Why do I take the lowest value? I take the lowest value to have a baseline for our assumptions as we don't want to pay at higher PE. I've included here the revenue growth, which is the only thing that could make HPQ trade at 12, 13, 14 PE assumptions. If they can grow their revenues by 20%, 30% sometime in the future, bullish investors would easily pay premium for this stock. Only then, HPQ could trade at such PEs. Of the 4 highlighted values, we'll take the lowest to divide the current PE of 6.47 and we'd get a discount of 0.94. Meaning if we're buying at these prices, we'd basically buying the stock for 0.94 for 1% of their yield. Third metric, we want to know our discount to when the markets have valued the stock before compared to the PE it is trading now. I have here 2 historical data, one from Guru Focus, which is readily available, and the other from Macro Trends, where I took the PE manually from the range of consolidation the stock has traded before. You'd see here the lows and the highs of PEs it traded then, and the numbers of quarters we took the PEs from. We'd only use the lowest average historical PE from the two. For the same reason, we want to have the lowest PE as the baseline for our assumptions. In this case, it's 6.5. We'll use it to divide the current PE of 6.47, and we'd get a discount of 1. It is basically trading at an average PE it traded before. In conclusion, HPQ beats 3 of my metrics. I think the stock is trading at fair values. I don't own the stock yet, but I'd put it on my watch list. I don't think paying premium for the stock is necessary. I want you to buy the stock at the lowest possible PE you can buy. I think fair values is around $38. When you multiply the second metric yield of 6.92 by the current EPS of 5.57. My entry price would be around $33 with that high assumption of 6 multiplied by the current EPS of 5.57. Looking at the charts, you might want to see that gap filled and only consider buy and then. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.